So we've had an interesting day today. One of the things which kept emerging was about the shape of Indian economy. So let's get down straight to the point and say that, today India is the fastest growing large economy. Even with 5.4, it is still among the largest. It is the fastest growing, sorry. And today it lags only 4 countries as far as the GDP size is concerned. So in this scenario, what's your outlook for the next decade? And I want each one of you to give your views. We'll start with Kailash.
So I've had this question very often in terms of 5.4%. So is this a start of a slowdown? Honestly speaking, with one data point, I think it's not doing justice to our country at all. We need to have a look at least a couple of data points over a few quarters before we can arrive at that kind of a conclusion. Till then, I tend to completely believe that it's the start of things in India. India will continue, Bharat will continue to grow. I don't think there's any other country which is going to grow as fast as India. Structurally, the government is pro-reform. They want the money flow to go down the line in terms of the bottom of the pyramid. And we have seen the various welfare measures, the schemes that have been there, have benefited. So today we've had more than 16 crore people come out of poverty and go into the lower middle class. I think on 2 counts, one is getting the infrastructure better, developing the economy, having good relationships across the East and the West is really going to benefit us in the long term. So if you look at the next 5 years, and I don't know about a decade, but at least for the next 5 years, we are pretty confident as HSBC Mutual Fund that India is headed in the right direction. And if anybody wants to play the India story, they need to be present there. With one caveat, I think the market volatility is going to increase. While fundamentally, economically, we'll continue to do well, I think we will see far more volatile markets in the next few years to come.
Okay. Swarup.
No, thank you, Prem sir, for having us here. Wonderful to be in Dubai. I personally believe if you track countries, every country has a sweet spot. And I think India is in that sweet spot. We're all used to saying that it's the great decade for India. There's no doubt or debate or what we will conclude on. In the next 8-10 years, India will be on a growth trajectory. But when you flip it and see some other sides of the story, there are some serious issues emerging in the form of unemployment. I think in the morning we heard a very buoyant sort of discussion. Will India grow at 8% consistently? No country is an Excel file that you can project it 8% year on year. That's not going to happen. Will it depreciate at 1%? I don't agree. It will depreciate at 3%, 2%, 4% the currency. So when you look at 2 sides and come to the conclusion, I personally believe that it is India's decade. And for all of us who are invested in that story called India, I would really recognize or would urge all of you to fulfill bulk of your financial goals within this 10 years of India. This is their sweet spot. When you go to the 11th year, some of these risks will have to be mitigated of overgrowing population, inflation at a certain level, and more important, 35% of our population is malnutrition. So all these 3 have to be catered to in a very structured manner for the 11th year to happen. So I have a very simple theory, itna risk mein jaane ka hi nahi hai. 10 years is looking good, make good your 10 years for India.
Okay. So, and Vishal, first of all, do you agree with some of the points that Swarup has struck a not so optimistic note? So,
no, I'm optimistic for 10 years.
Yeah.
For the 11th year to happen.
You haven't bought into, you believe the currency depreciation could happen?
No, it's a 3-4% currency depreciation that will continue. So, I mean, today morning we heard it will come down to 1%.
1%. Yeah.
I'm not in that camp at all.
And even on, you have doubts on the sustainability of the 8%.
No, you can't say that 8% year on year. No. Suddenly it's 5.3. Yeah. In these volatilities will give us opportunities. Okay. But to calculate 8% and project it on rule of 72, I'm not in that camp.
Okay. Even Kagger nahi. No. I'm not talking about...
That's classic case of death by Excel. Okay. It doesn't work in a linear line, right?
It doesn't.
It always works in a...
Thanks, and lovely to be here. Thank you for inviting me here. I guess the way I'm reading Swarup is that, look, don't expect a straight line, and we are in financial markets. So I hope everyone is seasoned to know that's not how this will play out. And we do come across the debate that, why is it different this time? Your fund managers, you'll always be bullish, etc. I do think the macro, and actually not just the macro, the number of factors that are actually aligning, the stars getting aligned in India's favor, do make this one quite special. So we've had phases over the last, every decade has a phase where we say, look, this is aligning, that's aligning, etc. This time it seems like between demographics, policy, macro, infrastructure having been, sort of laid out, government policies, very, very strong component of that. It allows investors to have a lot of mitigants to any one of these risks. So yes, we can be skeptical and say, look, I don't believe this will happen, or I don't believe that will happen. But on the whole, if you look at all these various growth factors, it should still pull through and give us much better returns than many other countries. So I would say, even if you don't get to the 8%, now that's an aspiration, that's a hope. Maybe it's a pie in the sky, who knows? But will it be a leading provider of growth? Yes. Will it be a place where a lot of money can be made? I think that definitely yes. No market will be a straight line. There will always be risks. Some of these risks we cannot overemphasize. So please don't be disheartened. If you see some bad news, yes, we have a demographic dividend. Half the country is less than 25 years of age. But that means that if we don't skill them enough and we don't employ them, it could actually put a different spiral to the growth story. Government policies, what happens if there is political change? What happens if there's a rethink? So those are always going to be there. But the point is, with so many people in an economy where a lot of groundwork has been laid out, on the whole, this should be a great time to be in India. And if you're not invested in India, please, please do reconsider.
Okay, great. So, Kailash, what would you think could be the challenges and the risks that we ought to be prepared for? Vishal hinted at a couple of them, so did Swarup, but your take on what could actually derail it altogether?
Actually, my biggest fear has nothing to do with the economy and nothing to do with the markets. My biggest fear today and the biggest risk I see is the investor expectation.
Of?
Investor expectation.
Investor
I think today, thanks to the last 3-4 years, most investors, when they look at their portfolios, have seen a 30%, 40%, depending on the product category that you are in. And when they are coming into the market, they are expecting those kind of returns going forward. And the chance of disappointment is going to be that high. So even if you look at what can derail the economy, so obviously global events can derail the economy. Monsoon can derail the growth if you want some structural part of it. But the challenge is that if we look at the investor behavior, the investor expectation for those investors coming into this industry, I think that can actually far exceed some of these structural reforms or structural issues that we can have. I'll give you an example. In the last 1 year, we've added nearly 1 crore, give or take few lakhs, of new to industry investors. Now you're having investors coming into this industry with the expectation which is here. And let's assume that 2025, we do not have good monsoons. A not so good monsoon, we've been blessed as a country to have good monsoons for 6 years running now. That can derail your rural economy. That can derail purchasing power. It can derail the consumption story. So that's a real risk we run. And we are still not a country which is completely comfortable in terms of water. So we do rely on monsoons significantly. That's a risk. A global event can be a risk. Political risk has now been addressed to a very large extent. So that has come down in terms of the prominence which is there. But I think if we don't spend enough time in talking to investors and bringing down the expectations, I think that can really lead to people being disappointed.
Okay. Swarup, your take on what could derail this entire story?
So I'll stick to my point. Nothing can derail the Indian economy for the next 10 years.
Okay.
This is a one-way traffic for 10 years.
One?
One-way traffic for 10 years.
Okay.
Nothing can derail the India story for the next 10 years.
But not even global factors.
No, I mean the best part is globally, and we come from South Korea, which is going through its own turmoil, and I was recently in the US, and we get exposed to various countries. The best part is there is global acknowledgement of the growth of India. Gone are those days when it used to be a sidelined country, not being discussed. The fact that there is absolute consensus on the growth of the Indian story is a given. So the point, and make no mistake, I earn a living selling the India story. That's the disclaimer I'm making as a mutual fund guy. But as we speak, and I'm just taking up from some of the commentaries I heard recently, we had one of the largest steel manufacturers saying that, it's wrong to compare us to China. Because that is a very different perspective of approaching. We have one of the largest tech owners of the country saying that we are not working hard enough. And recently we had a very large political leader saying that we are not producing enough babies. Those are the underlying things which are creeping up as we grow this. So from 2024 to 2034, this is a structural growth story. For 2035 to happen, these needs to be addressed, is the simple point I'm making. But make no mistake, this is a country which is headed in one direction. What Vishal talked about, the demographic dividend will play out. There will be only Indians serving the entire world in the next decade. That's the truth. But this demographic dividend will turn in the next 10 years when the aging data catches up. Right now, as a country, we are feeding 80 crore people on a daily basis. Probably in 10 years' time, we'll be feeding 1 crore 20 lakhs people. This is where we are headed. But next 10 years, it's a one-way traffic.
Okay. Vishal, what do you think could derail this entire story?
So I think, derail is a big word. And,
but in the past, we've been deceived,
Yeah.
just when we thought things were...
Correct. Yeah. So I think we should definitely watch out for bumps on the road.
Yeah.
And, external bumps really may not be in our control and therefore not our remit really because, geopolitical risk, war, COVID-like situation, these can come and impact anyone, anytime. On a relative basis, what is manageable, what is controllable? I think, there has been some recent chatter on saying, look, state governments becoming a bit too generous and promoting behavior which may not be sustainable through freebies and doles and farmer loan write-offs, etc. How sustainable is it? So fiscal consolidation and a very benign current account deficit, which is a very large part of the macro story today, can that be challenged? Yeah, it could be challenged if states don't behave in a sense. But the good news is that if you look at the history of India, it's always been a bit of 2 or 3 steps forward, 1 step back, and we then course correct. And forces do force you to course correct because states are also becoming very competitive. And like recently in the Maharashtra state government, the minister said, look, why are you worried? My fiscal is still under control and what I'm doing in Maharashtra, there was a scheme to give out cash benefit to ladies under a certain program. That's very much part of my fiscal and it's budgeted. So what's the problem? So again, people may have different views. Fiscal is something we'll want to watch very carefully. On the social side, we discussed earlier, employment, skilled employment, and that's the huge opportunity. That's something we should, I think, watch out for. And, a lot of factors like education, better quality sort of, I think, infrastructure, all of that plays out into these themes. So a lot is available, it's for the country to take now. But, I think even if we muddle up 1 or 2 of these, like I mentioned earlier, there are so many factors that any one should not allow us to get derailed. It may be a slight bump.
Okay. Now, one factor which is important to achieve growth is lower taxation, but low interest rates. Now, we have seen that inflation has been largely stable, barring again the latest numbers, which were a little alarming, but for a long time we've had fairly stable inflation. In spite of that, the RBI seems to be reluctant to cut rates. How do you think that impacts the growth of the economy? Vishal?
So our view is that given what we spoke about earlier, macro, especially the fiscal discipline, keep in mind, and just as a backdrop, not a boring lecture, but, keep in mind that the COVID response by most countries was almost at the other extreme in expanding balance sheets. And India may have been criticized at that point saying you're not doing enough. But in hindsight, at least, it seems like, the fiscal did not balloon to a level where you have now a challenge that cannot be managed. In fact, it's actually looking very, very good. So fiscal consolidation, I think, which the government has demonstrated, makes one feel very, very good, very sanguine about interest rates going forward. On top of that, we see current account deficits being really a surprise almost, largely because one of the fallouts of COVID was, I think, the growth of GCCs, Global Capability Centers. Now, Global Capability Centers, another engine of export and high-value export, adding to this entire equation of services export, manufacturing, is again making current account becoming very benign. The third factor I would talk about is more demand, because now that India bonds have been included in the JP Morgan bond index and therefore hopefully in other indices as well, more demand for India bonds. That again becomes another factor. And inflation, I think, as has been talked about, core inflation has been okay. Food inflation may be a bit more volatile. There's an argument saying why should food even be part of the consideration for RBI. So our view would be that India is getting into structurally a low rate regime. Now, whether the rate cut happens in February or not, I think the market typically runs ahead. And therefore, if you do believe that that is an investment play, I would encourage that please don't wait for everything to play out. Wait for, the two factors a lot of people are watching is, the change of guard in the US and then the next monetary policy committee meeting in early February. But I think we would expect that, in the next policy or thereabouts, we should have, a clearer signal of bringing down rates.
Okay. So, Swarup, what is your view on the fact that we've not had rate cuts in spite of the fact that inflation has been largely controlled? Some people advocate that the rate cut should be there. It will spur growth. What's your view?
Yeah, I think I completely agree with what Vishal said, and especially one part which he left behind for all of you is the beauty of the debt market is it definitely moves faster than the policymakers. And one of the reasons I'm not selling a fund, I'm just giving an example. The reason we launched a long debt fund last month was exactly the reasons that Vishal played out. And if people come in, and it's a great chance for investors to catch that near double-digit return for people who have missed out earlier. We are back there. But having said that, when you look at the global data is still very fragile. And when you look at the changing leadership across the world, the leaders now are very different from the earlier leaders that used to happen. Suddenly one word on the currency and lot changed within our currency movement. So when you look at the fragility of the data, I dare say our central bank will probably look for cues from that side before cutting the interest rates. But again, going back to what Vishal said, I don't think our interest rates have impacted us or the change. Just to put things in perspective, my home loan went from 6.5 to 9.5, a 50% rise. The corresponding home loan rate change in the US was 2 to 3 times. So we've still been cushioned on an impact in this entire regime. So the return will not happen in a hurry. But what happens in that market is it discounts is faster than the equity markets. So the investors need to take a call before those things happen. And at this moment, probably it's a great time to look at getting into those long spaces as investors is a great opportunity. At this moment, the investors is spoiled for choice. You know, the equity markets have become reasonable, still not cheap. The debt markets look fantastic, and if you look at Sheila's presentation on gold, many of guys like us who used to stand up and say equity is the only asset class, today are being thrashed by what gold has done over the last 10 years. So whichever you do as an investor, you will win in the next 10 years. So it's up to the investor to identify all this and take the necessary position.
Okay. Kailash?
So there's not really much left for me to say, thanks to my colleagues here. But
I'll ask
honestly,
your views.
I'll just add one thing.
Yeah.
I think to add on the fixed income side, I think the robust tax collection in India, more number of people paying the tax is only helping the overall balance sheet look better and better. That will somehow find its way into the debt market. So rate cut or no rate cut. And like Swarup just mentioned, I think in the last 3 decades, when I've been in this industry, I've never seen a time when equity and debt and gold are all expected to do well. You always have had 2 asset classes doing well, 1 not doing well, or 2 not doing well and 1 doing well. It's rare that you get a situation where you have all 3 asset classes. So today, people who want to look at if your debt fund is having a 7.25, 740 YTM, and you're expecting a 50 basis rate cut over 2 tranches in 2025, you're nearly looking at close to a double-digit return. I mean, that's the kind of situation you are in today. So it's a good time to be in India.
Okay. So it's a good time to be in India, but a lot of people here don't agree with you. Okay. So the higher you go up the wealth pyramid in Dubai, the lower is the allocation to India. That's the reality.
So, you know, it's always good for portfolio managers to do a rain check and reassess what's going to happen.
Okay.
India was not the flavor 3 years ago. Let's be honest. But is India becoming the flavor today? The answer is yes. Like you allocate portfolios of your clients based on your risk and return expectations of your client, it's time to put that risk return in favor of India from now. So if you are under-allocated India, no issues. But please understand that if you are under-allocated India, you will be under-allocated in your portfolio returns also. So if you are willing to accept the fact that if you are not there in the fastest developing economy, you are not there in a market which is going to grow, if you are not there in asset classes, both fixed income and equity and gold, which is expected to do well, then you are missing out on something. So the higher the pyramid goes, people do fancy very exotic products, and a lot of the top end of the pyramid has actually moved away from traditional boring products like mutual funds and gone into pre-IPO, you know, AIFs, etc., etc. We are not saying those are bad products; those are also good products. But today, sometimes boring is also good. And I think mutual fund being a very simple, easy to understand product is not as exciting as a pre-IPO or a private equity, you know, or a venture cap or something like that. And I think that's where it's time to reassess that if a country is expected to do better than most of the large developing economies in the world, wouldn't you like that country's weightage in your portfolio to go up by a couple of percentage points? That's the question each person needs to look at.
Okay. Now, Swarup, your views on this particular phenomenon that I see here is the higher you go up in the wealth pyramid, lower is the allocation to India. So,
yeah, I mean,
first of all, I mean, is your experience the same? And
I'd like to add something because the question you asked to Swarup, I want to give some facts. As HSBC, we have global products which are India-dedicated products, which are both fixed income and equity. In the last 18 months, we have grown that business 2.5 times. Okay, I'm just trying to say that the reason being, there is a huge demand from people coming into India or investing into India, and this is not just Indians. These are global citizens who invest in the Luxembourg-based funds, okay, which are dedicated India funds, which we advise. So we've seen a growth of 2.5 times. So people are seriously factoring India.
Okay.
I'll give the Mirae Asset view, is that, I'll give you my personal view on this. 14 years ago, I was interviewed in Mirae Asset. And then my then boss said that, people normally go to Hong Kong and Singapore, but we want to come to India as our hub outside Korea. And I used to think because it's an interview process, somebody was trying to sell the job or whatever. Today, as we stand, the house view, we just put up some slides of our chairman and founder, Mr. Hyunjupak, last year, and I got this opportunity to narrate this story to the Prime Minister of the country, is that I was sitting on December 27th, I was sitting in a room full of 200 Koreans, and there were 199 Koreans in that room, and one non-Korean, that was me. And suddenly on stage, I heard the word India. And I said, what happened? They said, he's realized you are not able to understand the Korean. And he rehearsed that in English, saying that in this global turmoil of this world, only one country will stand to benefit, and that is India. Our view is extreme bullishness on India as a Korean form, right? Now the point I'm making, and I'm making this is in all humility, is that, there is a risk to investing in a country, there is a risk to not investing in a country. The risk to not investing in this country called India is substantially high now. And make no mistake, whether I invest, whether you invest, whether you don't invest, the story of India will continue. Now, if you want to build a good allocated portfolio for yourself, not allocating to India is a bigger risk at this moment because of data points. And all of us can rattle off data points for the next 2 days continuously, and we are so proud to be sitting at a time when we are being backed by some solid data points across sectors. It is no longer just a service-oriented country, which it was before COVID. From services to consumption via manufacturing, quarter-on-quarter data is unfolding. Don't go by the last quarter's data, because people have bought enough cars, people have bought enough houses, and some amount of urban slowdown was just around the corner. But our house view is the rural uptake will sort of surprise us and balance this out. But watch the space. But not investing in India, it's your call. You want me to come back and back this year on year, I will sit here and back this year on year.
Okay. Okay, Vishal.
Yeah, so I think if your question is why haven't a lot of HNIs invested as much in India as we think the case is, I can maybe relate to my past experience as a banker, trying to offer these products to high net worth individuals, etc. And across cycles, when you have a compelling case, you go and meet people saying, look, why don't you, etc. And then either subtly or directly, someone will tell you that, you think your country is the center of the world. For us, it's not. We have enough experiences. So, someone bluntly told me in the US that, look, for me, emerging markets is Brazil. Why the hell should I take a 17-hour flight across 2 connections and go and do this? I'm not going there. So at best, you're going to be an outlier. Maybe I'll take a very small sort of adventurous allocation. I'm not going to make this a center point of my emerging market allocation, which is, fair maybe. We start believing in India, the Tina factor, we get all arrogant, there is no alternative, you have to come to India. I don't think global investors will think like that. But having said that, if we look at what we've solved for over the last 3 or 4, not 3 or 4, actually over the last 10 years or so, information, I think a lot better quality information, transparency, etc. is available. That's been always, I think, something we've been strong on. It's got stronger and stronger. And with the help of a network, I think it's getting better and better. 2 is, convenience and taxation. Very important factor for investors to actually make the call, which is what is my KYC process, what is the race, what all documents do I have to submit, and then taxation, because I will receive money only on a tax-adjusted basis. But I think with Gift City now, the access points takes a dramatic shift. And we just saw a presentation about how a global investor can really access as conveniently, as simply, without any real friction, a fully scaled, fully set up fund offering years and years of experience in India, run very efficiently because you already achieved, scale benefits. So that makes it, to my mind, a really compelling proposition now that it is this time, this is different because not only do you have a very solid, a very compelling macro story, a growth story, money to be made, but access points are now dramatically different. And in the past, I was told as a banker that, don't waste your time. You really have to focus on NRIs and, people who understand India a lot better when you go and market. I do think that, like I think Kailash and Swarup spoke about, the international, at least the interest we are seeing, is a lot more stronger. And therefore, this time, I do think it's different.
Okay. Kailash hinted at something when he was talking about mutual funds and he was talking about pre-IPO and he was talking about some alternate categories of funds. One thing that this audience, because we've seen kind of a boom in India in the alternates thing. Last year it grew 31%. It was faster than mutual funds on a very substantial base now. What would you tell this audience about whether they should look at mutual funds, alternates, or both? What are the virtues of mutual funds and what are the virtues of this thing? Why don't you share your views? And I think all three of you have both mutual funds and alternates, right?
We have.
You have.
So Prem, there is no product which is the wrong product. Every product has its virtues, every product has its pitfalls. Okay, no one says that you need to put 100% of your money only in mutual funds. There will be clients, depending on their capacity, who will put their money into alternates. There will be clients who will put their money into crypto. There will be clients who will be putting their money into anything new because it's exciting. Nothing is wrong. I think what people have now realized over a period of time is that everything has a different risk associated with it. And so long as you're willing to take that risk, there is no problem. So it's not one versus the other. It's really 1 and 2 and 3. And depending on your capacity on 3 points: risk, liquidity. Because typically an AIF, etc., will not have liquidity associated with it. May not have. So I think risk, liquidity, and your capacity to understand the complexity of the product. These are the 3 factors which go into deciding which product you need to buy and which product you need to stay away from. So today, for example, in my portfolio, I don't touch crypto. But there are enough people I know who play that game, but I don't understand it. I have chosen to stay away from it. It's as simple as that. So it's not one versus other. I think it's all of us together. We just have to decide what's good for the client, or the client has to decide what's good for him or her.
So I think products are a factor of wealth creation in a country, and in a country which is now getting serious on individual wealth creation, the products will find their own position. We feel that it's a pyramid playing out. At the bottom, people will probably say that, let me enter the market through participation and then look at a lot of index buying, whether it's through index funds or ETFs.
Okay.
And then if you look at the industry unfolding, 4 years ago, the number of folios in our industry was just 2% for passives. Today it is 16%. So incrementally, a lot of people are taking the participation. Above that, they will come for, some kind of expertise, which is active management or factor investing. And that will probably cater to people, like Kailash said, with a higher risk-taking capability. And as the wealth of the country starts growing and we get into a category which is a different risk profile, we will see the growth of AIFs and PMS and more specialized sort of products catering to rightfully the kind of people that are there. Thankfully, India is getting into that position. I'm told that in the next 10 years, the highest number of new family offices will be registered in India. That's very different from the India we used to know. When that happens, we'll see more and more integrated products at play. And then it's a market which is waiting to unfold. And with the tech play coming in and the ease of transaction through regulatory changes, and then Vishal sits on a lot of boards for that, we are seeing that unfolding. I think the investment environment of India is set to change. And I dare say it may not have any correlation to what has happened to all of us till now. For a lot of people like us, it will be a lot of unlearning, learning, and believing that the future investor, because of the demography, and I think when you look at my father, me and my son is more veering towards crypto than equity markets. I dare say, to retain them, maybe we have to produce products at a higher risk profile, because their risk profile is very different. But it's a great time to be in the investment business at this moment of India when you see this unfolding.
Okay. So, Vishal, my question is, should alternatives emerge to be an important category in India? And so should this audience be looking more seriously at alternates, or should they continue to be in mutual funds, or a mix of both? What are your views?
So I think, clearly, again, I'm placing myself as an offerer of product, and there's no doubt in my mind that offering an alternate product is far more interesting, because there's so many things, there's a lot more risk concentration, the strategy is very sophisticated, there's a lot more sort of I can, as an advisor, bring to the table. It feels better, right? But also, equally, I don't think there is any track record which says that over a long period of time that has necessarily beaten the plain vanilla, mutual fund strategy. Now, adding more colors is what I think this wider range of basket does to the picture, the far wider spectrum. So it can't or should not be an either-or. There will be very bespoke strategies, high-risk strategies, very specific ideas that someone wants, which can be delivered through an AI FPMS or a boutique type of a product. And I'm sure there's a lot of them available, which you might have worked with. But going forward, I think, given some of the changes that are happening in the structure, I do anticipate that just the fact that you have such clear, simple access to scaled-up mutual funds in India, it is a dramatically different world of choice that you're now getting. And, when you take a closer look, the level of efficiency at which the Indian mutual fund industry is actually operating at, some of the funds that we run in, literally a few basis points of access cost, even when we are actually deploying fairly sophisticated underlying strategies, like an example of smart beta index funds. This just completely, as in to me, it's like, you were working with, the basic 7 Vibgyor colors, and now suddenly the world of 256 and whatever, 4K color palette has been thrown up. So, now it's the challenge for you is how do you choose? A lot of data is available, but certainly very, very good for the viewer or the customer with the amount of choice that is now available.
Okay. Now, just want a simple answer to something. What percent allocation should the mass affluent, the HNI, the UHNI, NRI should make to India? What allocation should he make to India? Because here, this point for choice, here the products available from the entire world, whatever. So.
I think on the MSCI we're what, 6-7% India, 8%. Yeah. I mean, for us, I'll probably project a reciprocal. When we look at global investing, we say 8 to 10%. Should reciprocate it by 8 to 10% India, looking at where it is right now, and with the MSCI at around 8%, that's logical is where I'll put it.
Okay. Vishal, he's not so ambitious.
No, it won't come as 8% is the reality. That's why he's speaking the truth. But you asked me what should be, I've given an answer.
Okay.
Look, obviously as I think we all understand, it'll differ by the customer. So very difficult to do a rule of thumb here. But certainly the first thing to look at is, are you overweight India or not, from whatever your base level allocation is. And, if the MSCI is your guide, then, versus the 8%, are you going to double down? Are you going to be 50% more or whereabouts? But certainly it should be at least in that range, I would say. Also, I would encourage, please look at the debt category, because sometimes we're just so focused on equity, we're just missing out on the debt investing category in Indian bonds. Now with emerging markets index inclusion, the expectation, I think India is already at about 8-10%. So if 8-10% of your debt allocations are not in India, there is a risk that you will underperform. Because we spoke about macro, we spoke about fiscal, current accounts, etc. And if debt plays out very well, we spoke about the fact that some of our funds are already delivering double-digit returns when the so-called rate cut or move hasn't really happened. So please look at the debt category as well, which traditionally may have been ignored, because when it comes to India, a lot of investors look at it as an exotic market. I'll take a concentrated bet on one manager or one strategy or one house that I'm familiar with. I think very, very important for us to rethink or re-strategize our India plans. There is a plethora of products that will get, be accessible to us, and asset classes including debt. So I think this is a multiple jump from wherever we are today in your client's portfolio.
Okay. Now, one final question to all three of you. We've been hearing about the virtues of Gift City. So how Gift City makes things a lot easier for foreign investors and NRIs. So what are your plans, all three of you, for Gift City?
So maybe if I can go first. So we've already received a license. We're in the process of filing our first few products. The first products, I think we heard from a friend in the previous section, that a simple access into an existing mutual funds to us is almost like a no-brainer. So if you've got great products, you pick a few broad strategies which gives very simple, very, very effective access. And these are funds which are scaled up, have years of experience. Every statistic you want to run on them, you can run on them. So straight access through Gift City into one of the funds is the first way we are looking at approaching it. Over time, with any house which has got both funds, mutual funds as well as alternate strategies, I think clearly it is a very efficient way to access India. And even as managers, as an example, we have a Mauritius vehicle, but Gift City is just, just proximity, the ability of control, the ability of accessing talent, and the flow and the support that you're getting from the government. I think it just makes it a very, very, a high quality access vehicle versus many others that were earlier available.
Swarup?
I think for us, we first thought we'll come to Dubai and start our business. And I remember my first trip, and I was with Mr. Krishnan there at Burjil's office here. And it changed everything for me in that one meeting when he pointed out there are 3 Indians in Dubai. One who's now pedigreed Dubai, has got no link in India. That person is earning money in dollars. The second who has some, I don't know if you remember, I'm just reminding you. The second, he or she has some people in India, so some connect in India. And the third who's just come to Dubai in a pursuit of making money. The person who's yet to make money. With a rupee product, you are catering to that person. A person who earns in dollars will invest in dollars. And that's when it really dawned on to me the importance of having Gift City for us. And we went back and put a full-fledged Gift City in place, and we have our product up and running. After we had our first product, which is what Vishal is referring to, just a conduit into our products, because we wanted the back end in place. There's a lot of compliance, paperwork, and also we wanted to do it with a simple product. Our entire perspective of Dubai sales has changed. We are now money every day here. Now, after that, we then launch our outbound, which is now hopefully getting Indian money outside. And then the third, we launch our fully active. And in a matter of 2 years, we should have a full-fledged product suite in front of you. We also expect that the Gift City as a regulator will now start appealing to other people across the world, and the acceptability of Gift City will start rising. And then together, I think we can build an excellent case for ourselves. Extremely bullish on Gift City. At this moment, the situation is such that the offices that we have is the one which we've been given. I hope we can build a bigger office with the new buildings coming up, but it looks an exciting proposition for us. And as we build this India story globally, I think that will be the perfect conduit for all of us.
Kailash?
I couldn't agree more. I think if you want to be a serious player in financial services world, I think you have no choice but to be in GIFT City. Hopefully 2025 we will also be there. The only advantage we have is we already have an office space as compared to many others who don't have an office space. But we need to get through the regulatory filings and getting things done. But we hope to have some products in 25. I think the one thing which the Government of India and the GIFT City regulator will have to really work on is the acceptability of GIFT City across the different developed market customers, because they're so accustomed to Lux, that to get it to the stature will take some time. So that is something some people will have to work for. Till then, there are lots of low-hanging fruits which you can do, but the serious money which is there will come from Lux till they get comfortable with the GIFT City regulations, etc. But I see GIFT City grow very, very fast, both inward and outward flow. Just not inward, but also outward flow, because you have a lot of Indians today who are extremely wealthy, who want to remit through the LRS route into global products. This is a great place to structure those products which are feeders into large global products.
Okay. But I just want to say, because Vaibhav is here, and Vaibhav will correct me if I'm wrong, is that the intent of the regulator at GIFT City to go across the world, convincing the world of them, is phenomenally high. We've already done 2 rounds, one in South Korea, we're going to Singapore, the other, I think, in the coming month or whatever. They're willing to cooperate in every way possible to make that story happen. It's so refreshing to see such a forward-thinking and quick regulatory action, and it's wonderful working with them.
Okay, I'm sure it will augur well for the country, augur well for the investors here. So, with this, we come to the end of this panel discussion. In fact, we come to the end of the proceedings of the day. So, thank you all for being here with us, and thank you, gentlemen, for sharing it.